The broadcast is now starting. All attendees are in listen-only mode.
All right. Good afternoon, everyone. It is January 9th. We got about 2 minutes, and normally I start these off a little bit earlier, but since the markets have been whipping around and the phones have been buzzing, I got to get tied up here. But so we took a break for a couple weeks with the holiday and the holiday markets, and I was off last week and stuff like that. So we're back on the path, and the idea is to do this every Thursday, and for roughly an hour. And the game plan is to go over the trade setups. The guys that are brand new, what we're going to do is go over the trade setups. All right, there's basically 4 simple rules that you'll see inside the training room. Not only will we go over this, we will then jump into a live market, and in slow motion, I'll make some. Number one, I'll make some observations, but number two, I'll actually go inside the DOM and push buttons. I'll show you how to manage the trades, when to exit, that kind of thing. Okay. In the beginning, I do have to go over some disclaimers. So I'll take, normally I don't like to throw them up there. I'll take about 5 minutes to go over them and tell you what this all means, because I've been doing this for almost 25 years, and I really, over the years, I've seen the good, the bad, and the ugly. So I don't take this disclaimer lightly, because I do think the guys that usually get to knock on the CFRN door, a lot of those guys are brand new to trading. They're new to our space, and they're getting emails and stuff like that, like, hey, you can do this, you can do that, you can make this, you can make that, but nobody really balances out the risk when they talk about this stuff. So I don't know. It's something that I do. I take 5 minutes to take the extra step. I just think everyone should know it. So that's kind of the game plan. So we'll go over it. Guys that are brand new, this is going to be a great cheat sheet for you. Okay, great syllabus to lean on. The guys that are returning CFRN members, the guys that are popped in here, you guys get to ask questions. You know that. I'm going to hammer the same things over and over and over again. The idea is to regurgitate that to you, so you kind of retain that information and apply it. The idea is to kind of almost turn you into a robot and kind of have you fixated on, these are the rules, these are, the steps to take, and kind of walk you down the path step by step by step by step. All right. So, that's a scoop. All right. All right. So let me do the required stuff here first. Okay. As I said, I don't like to take this lightly, and what I do is I'll take a few minutes to go over it. And basically, it says, look, if you're going to trade futures, number one, it's got to be risk capital. Okay, you lose your dough, it's not going to change your lifestyle. You're dealing with leverage, right? So you can lose everything and some in your trading account if you are not using stop losses, you don't have a trading plan, if you're not looking over your trading account, you're not in tune in the marketplace, what the market's doing, you're not in tune with what the news items are for the day. If you turn your back to what's going on, this disclaimer is going to hit you right smack dab in the face. And I've seen it over the years. All right. So that's why I talk about it. The good thing is, on the brighter side of it, because I know this isn't a rosy way to start a webinar, but the good thing is, we do have a trading plan, right? If you take the CFRN path, you have a trading plan, right? So that checks that box. Well, every trade has an 8-tick stop attached to it, and that checks that box. We're going to be on a 4-tick range chart. So we're looking at the market under a microscope, right? So you really have to be in tune in the marketplace and be in front of the screens, all right? It kind of checks that box, and then we don't trade around news items, right? That's well advertised in the room. So if there's a crude report at 9:30 on a Wednesday Wednesday morning, you're not pushing any buttons. So that kind of eliminates that risk. Okay, and all the trading that you're going to do is going to be off of the DOM. If your brand spanking new, a DOM is this guy here called the depth of market. Okay, if you think the market's going to go up, we're going to left click in the green. If you think the market's going to go down, we're going to left click in the red. Okay, this is how we make our money inside the DOM here. All right. So in order to do that, you have to be glued to the screens, right? So it kind of checks that box. So my point is, okay, even though this isn't a rosy way to start a webinar, and we're talking about risks and all the scary stuff that are associated with trading, CFRN is preaching some of the positive things that you need to have or be doing or executing so you don't become a casualty to this disclaimer. All right. Doesn't eliminate it altogether. No, it doesn't. You can be doing all the right things and some goofy things comes out in the world. And yes, it could hop over your stop. That means, yes, you're still in the marketplace. Yes, that means you have unlimited risk at that point. That is kind of the black swan worst case scenario. That could happen. Okay. The good thing is, all right, because you are in front of the screens, right, you'll be in front of the DOM. And if the worst case scenario happens, at least you'll be able to hit this hotkey here. It's exit at market and cancel. That means get me the heck out of Dodge, take a deep breath, and figure out what the heck just happened. All right. If the worst case scenario happens. All right. So that is the bulk of the disclaimer. Okay. The other thing that I have highlighted here that I didn't have before is past performance is not necessarily indicative of future performance, right? Things change, all right? The good thing about that, all right, or the positive spin on that is the trade setup that I'm going to show you. I gotta erase that. Where is it? Here it is. All right, it's been around from day one. It hasn't changed and hasn't been form fitted. The snapshot that Mike took goes back, what, 8 years? It's a decent NASDAQ chart back in 2012. And I've been in the room since day one. So the rules haven't changed. Yes, other things have been created, but this slingshot setup has been around from day one. Okay? So again, back to the disclaimer. Yep. Past performance is not necessarily indicative of future results, but you're going to be learning something that's been around from day one. Okay? My relationship with CFRN, because sometimes it gets mixed. All right? I'm Bert with Daniels Trading. That's who I am. Okay? My role in this, well, it started roughly 10 years ago. Dwayne and I connected in some way, and it was just radio. And he said, look, come on the radio program, and let's talk markets. People are always asking questions. You've been around, you can answer them. I said, sure, yeah, no problem, we can do it. What I did notice in the background is that a lot of people were just asking him, show me how to do it, show me how to do it, show me how to do it. Ultimately, he got together with Michael, their trade station developers. Ironically, our platform reads easy language, and Mike and Dwayne are trade station developers, so they were able to put the indicators inside the platform. So I guess this happened to be at the right place at the right time, to be honest with you. All right. So that's kind of how it all started. So I support the platform, the execution, the brokerage, if you decide to use Dtpro. The good thing is I'm a phone call away. All right. That's the beauty of it. So if you run into a problem or you want to talk to somebody, I'm going to be the guy that picks up the phone. Okay. So that's comforting, especially if you're learning to trade or learning something new, or you're getting to, learn the platform, something new. That's a big deal. Okay. So that's my role in all this. I'm kind of the support role. if you decide to take the plunge and go down the CFRN path, you know, the membership that goes directly to them. Anything on their website, you reach out to them. Logic 247, by the way, Logic 247 is right here. Okay, anything pertaining to this, you can reach out to CFRN directly. The bottom line is, I guess, is what I'm saying is, Bert doesn't work for CFRN, and CFRN does not work for Daniels Trading. There is a line. There has to be a line, okay? And there's no crossing, all right? So in a nutshell, it's their indicators, it's their software, they're the educator. It's a third-party relationship, okay? That's what this says, okay? And that's kind of how the agreement is, okay? It's not uncommon for people to call me up and say, hey, I'm trying to get a hold of Mike. Can you have him call me? That's fair game, okay? If you have questions about the setups and, you know, you want to chat about markets, again, that's fair game too, okay? You just have to raise your hand, all right? Or just give me a call or shoot me an email, all right? So that's a scoop, all right? So let's knock that down. And let's talk about the trade setup. So advance warning, this is live. My phones might buzz, so I might have to put you on hold or hit the mute button. I just want to give you advance warning if that happens, okay? So let's get rid of this. And let's go to this guy, okay? So the guys that are brand new, here is your cheat sheet or your syllabus, okay? This is what's going on in the training room, okay? First order of business is the time frame. We are on a 4-tick range chart, okay? And if you have Dtpro, this is how you get there. My gut feeling is you're on a time-based chart. It could be on a 5-minute, okay? You could be on a 30-minute. If you're following logic, right, you're on a 5 or 30, okay? Or you might just be staring at a daily chart. Either or, you're probably on a time-based chart. The ideal is to get it to the 4-tick range, and all you have to do is in the upper left-hand corner of the box of the chart, hit the drop-down box, and go down to Custom, and select Range Bar. Make that one look like a 4. And once you do that, you're squared away, okay? You're looking right now at the ES chart on a 4-tick range, okay? The benefit of it, okay, one of the pluses is that the height of each candle, no matter how big or small they look, it's always 4 ticks in height. So in the room, okay, you're going to start hearing Michael call out the highs and the lows of the current bar. Okay, so what does that mean to you? What does that mean is because he knows the height of the candles, right, it's always going to be 4 ticks in height, he could then be proactive in placing his orders. Okay, in other words, if we're at 32.72, okay, instead of waiting for this, all the rules apply and then jumping in there and left clicking into the DOM, what he'll do is he'll be proactive, and maybe if we have a bullish setup, he'll place an order above the market and place a buy stop. And by the way, in order to do that, instead of left clicking, now you're right clicking with the mouse. So he might be buying it above the market, or if we get a sell signal, okay, then what he can do is he can be proactive and place a sell stop below the market. The idea is if the market takes off, okay, he's going to stop himself into the trade, okay, or if it breaks down, okay, he'll be short as the momentum carries it down, okay. So that's what he's doing. So pay attention to that, because there'll be a time where you'll see a move like this, and you're gonna like, dude, how did you get in that trade? There's no way you were fast enough. This is how he's doing it. He's buying it on a stop or he's selling it on a stop. Okay? He's saying, look, I want in if it takes off. I'm willing to sacrifice because your price isn't guaranteed, right? So you might incur some slippage. So he's willing to take a few, maybe a tick or two a slip in order to have some representation in the market. Okay, that's what he's doing. So the bottom line is there's two ways you can enter the trade. Remember, we're buying and selling. We're buying in the green, and then we're always selling in the red. And there's two ways you can do it. You can either left click, okay, which you'll probably see me do today, or you can be proactive and you can right click in the green, which would be above the current market price, okay, and vice versa on the sell side, okay. Either left clicking to get short, or we're right clicking below the market to get short in the event the market breaks down, okay. That's how we do it. So all that being said, that was a long-winded explanation of get on the 4-tick range chart, okay. One of the big traps that people fall into that I see is that they do the right thing. They come down to custom, but they go right and they gravitate toward the tick bar because everything, in the CFRN world, it's ticks, 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 right? So they end up gravitating toward the tick bar and they make that 2 look like a 4. It's not the same chart. And if you're staring at something like this, it's just wrong. Go to a 4-tick range, okay? The tip is this little parentheses right there, an R, okay? That's the tip off. All right, enough of the time-based stuff. The rules, okay? We're going to work on the top portion of the chart, okay? So here we go, some buzzwords and setups, okay? This red and blue line is referred to as the MA1, okay? Nothing fancy about it, just moving average 1. The green line, well, that's the BBC. That is short for bullish, bearish cross, okay? Together, that makes up step number 1, which is this. When the MA1 crosses the BBC and the MA1 is red, that's a bearish cross, okay? Then at that point, we're looking for shorting opportunities. If the MA1 is blue and crossing the BBC, now we're looking for bullish opportunities. So the one that's highlighted here, that's a bearish cross, right? And the reason is the MA1 is red, right? So now we're looking for shorting opportunities, okay? Now note, I did not say get short, get long, get short, okay? I said we're looking for buying and selling opportunities because it kind of leads us into step number 2, which is this. After the cross, okay, the cross lights the match, okay? Okay, we're on alert status when that happens. After the cross, the normal thing for the market to do is to pull back to that green line or the BBC. That's what we're looking for, the normal thing for the market to do, okay? Now, not only are we looking for a run to the green line, we're looking for it to touch it, but then more importantly, close in the direction of the trend. We have a bearish trend, okay, that was set by the cross, a bearish cross, then we should be looking for a red candle, okay? We have a bullish cross, okay? If the blue line is crossing the green line and we're looking for a bullish opportunity, we're looking for the market to pull back to the green line, but then we're looking for either a green candle or a blue candle, okay? What you're gonna learn at the end of this, when everything is the same color, that stacks all the probabilities in your corner, okay? Now, to cut up step 2 a little bit further, okay? We're always looking for the market to do the normal thing, right? That's the best we can do, okay? Sometimes the market has so much bullish and bearish momentum, it won't get to the green line, okay? So what you're gonna train yourself to do, and what I'm gonna hammer this afternoon, you're gonna get in the habit of as soon as you get this cross, you're gonna activate the trend line on your chart, okay? This guy, let me erase all this guy here, left click. As soon as you get the cross, that, okay, engages the trend line. That's a habit, and a good habit you're going to get involved in doing. Okay, as soon as you get the cross, left click on the trend line, get ready to draw trend lines. Okay, why are we doing that? Well, there's a couple reasons, but the biggest reason is we don't know if step 2 is going to come into play. Okay, we don't know if it's going to get to the BBC and fail. All right. So while that's happening, we are drawing trend lines. All right. We are drawing trend lines as it's attempting to get to the BBC. All right. That's what we're doing. Because if it doesn't, here's a perfect example of it, and we close below the trend line, and we have some stuff going on. Step 3 is in play. Okay. If we have separation and divergence, which we'll learn in a few minutes, it's game on. It's time to push a button inside the DOM and take action. Okay, so you're going to get in the habit of drawing a trend line because we never know if it'll get to the BBC. And if it doesn't, then you're at least in a position to take action, right? If you do that. And there's other reasons why we do it, which I'll go over in a few minutes. Okay, but the main reason is if we can't get to the BBC, okay, some alerts should go off in your head like, uh-oh, we couldn't even get there and we closed below the trend line. All right, something might be happening here. It may have so much bullish, bearish momentum it can't even get there to the green line. Okay, so step 1, bearish cross. Step 2, normal thing for the market to do, gravitate toward the BBC, but you're looking for a close in the direction of your trend. Okay, now our eyes are gravitated toward the oscillator portion of the chart, which is called the slingshot. Okay. By the way, the trade exists down here in the slingshot. Okay. I'm going to show you why in a second. So the nuts and bolts of the slingshot. The red and blue line is referred to as a cycle. Okay. The green line, well, nothing fancy about it. It's just called the green line. Okay. But the separation as the green line is pulling away from the cycle, that is the separation or the divergence Michael was talking about in the room. Okay, so let me cut this up a little bit further. The cycle is telling us the moment, it's red, so that's good for the home team, right? Red MA1, a red candle, a red cycle. Not only is it red, it's telling us, look, the momentum is bearish. Not only that, it's got a good slope to it, right? It's got a nice 45-degree angle. You should be excited when you see that because that's telling you have the wind to your back. It's telling you, look, the momentum's bearish in the NASDAQ on the 4-tick range chart. Okay, that's what it's telling you in this time frame. Okay, the green line pulling away from it together with this price action up here, see how both of them are sensitive, okay, is saying, look, this was potentially a pullback, all right, in this ongoing downtrend, all right, and the fact that the market got up to the green line and it closed, okay, in the direction of the trend, that little variable is saying, look, that's potentially that air pocket in this ongoing downtrend, okay? It's time to get short, okay? When this is present here, and we have the separation with a red cycle with a nice slope, it's game on to the downside. You get short. Because the normal thing for the market to do is this. The normal thing for that green line to do is pull away and then get into the cycle. All right. And price should follow along and make a new pivot low. It's at this point here, when this comes together, is when we pull the trigger and get the heck out of Dodge. Why? Because here's what we expect to happen, and this is why the trade exists in the slingshot. The green line pulls away, gets into the cycle, pulls away, gets into the cycle, pulls away, gets into the cycle, until what? The momentum is blue, right? We got a blue cycle, so that's telling us, hey, the momentum's turned, right? So now we're looking for the green line to fall underneath it and create bullish separation or bullish divergence, okay? So in the end, what you end up doing is selling that rally, selling the rally, selling that rally, buying this dip, buying this dip. And along the way, taking profit, taking profit, take a profit, take a profit. That's why it's all down here, okay? That is the game plan, okay? That's what you're doing in a nutshell, okay? Now, looks easy, simple, right? None of this happens. You don't push any buttons unless one major thing is happening, okay? The market needs to be trending, period, right? It needs to be trending. So, as this is happening, we better be making lower lows, or we better be making higher highs. And it may sound easy, okay? You know, that's what the market should be doing. But in the heat of battle, when you're looking at the charts and you're looking at it under a microscope, it's not that easy. And it's one of the big traps that people fall into. If they're spinning their wheels, or they're wondering why they're having a lot of break-evens or stop outs or whatever, okay? It's usually because they don't realize they're stuck in a sideways market, okay? And we'll go over that, okay? So this trending phrase, okay, that should be on the top of your piece of paper. Is the market trending, okay? Or as soon as you get this cross, okay, you better be looking to see if the market is actually trending or not, okay? So that's the scoop. That's the trade. That's been around from day one, okay? And like I said, every trade has an 8-tick stop attached to it. So I'm brand new. I've never traded before. What does that mean to me? You're trading the gold and the crude, and you're dead wrong and you get stopped out. You're risking $80 a contract. If you're trading the S&P Mini, it's closer to $100. If you're trading the Mini Dow or maybe the Euro, that's closer to $40. Okay, that's what that means if you're dead wrong. Okay. CFRN will teach you aggressive risk management rules. I will go over that, okay, if we get involved in a trade, okay? The idea is to get the risk off the table right away, okay? So, you're on the trial, you're just beginning. Maybe this is day 1, day 2. Here's what you're signing up for. Basically, you're not learning to pick the top or the bottom. You're not learning to trade it from point A to point Z. You're learning to take a piece out of the middle, period. And you're going to use aggressive risk management, so you're going to be trailing a stop. Okay, so that means you're going to be scalping. That means you have to be in front of the screens. Okay, this isn't a set it and forget it kind of scenario. You have to be engaged in the marketplace. You need to be in front of the screens, and you're following rules. So now that means you have to have some sort of discipline to follow rules. Okay, that's what you're signing up for. Okay, with all that being said, there could be a lot of trades that you'll be taking. That's what you're signing up for. Okay? All right. Let's check that box off. Any questions about the setup? We'll go live, and then there'll be some observations, and there'll be what's wrong with my mouse here? Here we go. Let me get rid of this. Okay? All right. Let me get rid of the live. Let me stay in demo mode because I have some positions on, and I don't want to screw those up. And to be honest with you, I'm in demo mode, so you can see it here, transparent about it. But this is for training, and that's what we're gonna do. Okay, so that's it. If you have questions, raise your hands. Okay, guys, please. And so here we go. We're gonna cut this thing up. So the first order of business, okay, then we'll just start with the S&P, okay? First question that you ask yourself as soon as you get involved, you start looking, are we trending? Are we making higher highs or lower lows? Here's a good habit to get into. See the zoom out button? This should be your best friend, okay? If you just take a few minutes to click out, zoom out, maybe 3 clicks, what this is allowing you to do is see left, right? What's going on over here dictates whether we're trending forward, right? So hitting the zoom out button is going to tell you a lot, okay? So get in the habit of doing that, because what ends up happening is you're looking at Mike's floating charts, right? There's 4 of them, okay? And they're blowing up pretty good, okay? So what might look, you might be looking at a chart, it might look like it's trending, okay? But if you take a few minutes to zoom out, zoom out, zoom out, okay, we might be stuck in chop, and you don't even know it because it's so blown up. So take the few minutes to do it, because it's going to save you either break even, stop, or avoiding a stop loss potentially, okay? So zoom out is going to be your way of helping you solve that problem. Are we trending or not? The other thing to do, if you're not sure about it, because it's not easy, dynamic support and resistance dots, okay? If they are side by side, okay, this isn't necessarily a good example. Let me find something that might stick out. Like this. This is the gold, okay? Notice the first thing I do is I zoom out. It's just a habit, okay? Look at how the dynamic support and resistance dots are kind of side by side here. They're like a pair of choo-choo tracks, okay? That's your first indication that we're sideways, okay? Now, if the chart's blown up, okay, you may not see that, okay? You might not see that, okay? Like here, okay? Well, we have the cross here, okay? We're getting our first pullback here, all right? But really, are we trending? Okay, in fact, let's observe the gold right now in real time, okay? So here, we got plenty of rules here. Check this out. Bullish cross, right? MA1 is blue, okay? What do we do next? Activate our trend line. Why do we do that? Because we do not know if it'll get to the BBC. Well, it did. It touched the BBC. Not only that, we have a bullish close. Do we have separation? Do we have step 3? We have a blue cycle with separation. The rules apply here. There's everything here, okay? What's missing? Are we trending? In my opinion, no, we're stuck sideways. But you know what I'm going to do? Because I do want to show you how to place a trade. Don't push any buttons, okay? Okay, here's how we get into this thing, okay? Here's our up close, okay? All the rules are there, but the fact that we're trading sideways is a disqualifier in my opinion. But again, if we're staring at this thing like this, okay, it might be a different story, right? All right. So if you're going to do that, in order to get involved, okay, as we said earlier, if we get long, we're going to click in the green. If we get short, we click in the red. All right. So this one, we would left click and get long. Okay. Let's just get it done. All right. So we're filled. Okay. We got long. We should be long from up here, 1554.90. All right. But it's better. Okay. But here's what I wanted to show you. Okay. If it qualifies, this would be a bullish setup. We would go inside the DOM and left click. All right. See this Tinker Toy triangle up here? Okay. Notice how when I open it, the bottom of the DOM opens up. What this does is create a bracket order. Okay. And what this allows us to do is allows us to place a stop loss. Okay. Right behind it. Okay. So if you check off buy stop and sell stop, okay, and right click over it, go factor in ticks, make that look like an 8. What it will do is as soon as you enter the market, it'll put your stop loss 8 ticks away, okay. I had it set it at 10 just because, I don't know, I had it there, okay, but it should be 8 ticks away. So the bottom line is we are long, okay. This green line's telling us we're long, okay. Up on top of the DOM, it's telling you, dude, you're long, and your P&L is moving. All right, so there's about 4 different spots that says you're in the market, okay. Not only that, this is our stop loss that was automatically placed. If you're not sure about it, go to trading, positions and order management, and have this box open at all times. It doesn't have to be smack dab in the middle of the chart, but this should be somewhere, because if you have any outstanding orders working, it's going to be right here, okay. All right, so here's our stop loss, okay. It's right here in the DOM. All right, the rule set, if it goes plus 4 ticks in our favor, we move the stop up to break even, which means our entry, okay. Or if it closes on the other side of the MA1, that's this line right here, we move the stop to our entry, okay. As I said earlier, the reason why this, okay, technically we should be long from up here, okay, and you would actually be stopped out of this trade. The reason why we're getting grief on this is because we're not trending, okay, and that was that point I was making earlier, okay. Here, we're going to get stopped out. The reason is all the rules were there, right? They were all in play there, but the one missing piece was zoom out, zoom out, zoom out, and in the bigger picture, we're trading sideways. So someone who bought it right here because they were looking at this like this under a microscope, they're stopped out. They're they have $80 out of their account, okay? We bought it even better. We got stopped out. Doesn't surprise me, okay? So I'm telling you, okay, this is going to be your best friend, this zoom out button. Please take note of it, okay? All right. That being said, all right, the good thing is there was a lot of good things there, okay? I was able to show you how to get inside the DOM and place an order in slow motion, but the setup wasn't there because we weren't trending. All right. Let's look at crude oil, okay? Are we trending? Take a look at it. No, we're sideways here too. All right, so let's cut this up. We had the bearish cross here, right? So we're thinking getting short. Next thing we do, activate our trend line and start drawing, right? We do that because we never know if it'll get back to the BBC. It actually does, right? We have a down close. That's good. We have a red cycle. That's good. And we have separation, all right? The short would be here, okay? But again, zoom out, zoom out, zoom out. We aren't trending, okay? We're sideways. Get the theme of the webinar today, this trending thing. It's important, okay? So for the moment, until the crude takes out maybe this pivot low here, all right, then we'll talk about possibly getting short, okay? But right now it's sideways, and it's no reason. Not surprised that we're caught up in a mess here, okay? So let's get rid of that. Let's go to the ES because it looked like we were trying to get toward the top of that. Okay, looking at the S&P 500, notice the first thing I do is zoom out, right? So they had a little bit of congestion here, okay? Let me make a point because I'm staring at this. This is a good point to make. So we had the bullish cross here in the ES, correct? Okay, what's our next order of business? Activate the trend line and start drawing as we gravitate toward the BBC. The normal thing for the market to do is pull back to the green line, and we're looking for a close in the direction of the trend. That's your candle. Okay, the cycle was blue, and then all of a sudden, it's red. All right, so what happens next, right? As I said earlier, when everything's the same color, that stacks the probability in our favor, right? Okay, well, that doesn't qualify, right? When the cycle turns a different color, okay, so it does the price actions there. Okay, it pulls back to the BBC and we have the up close. If the cycle turns color on you, that trend line is required. It has to be drawn. The good thing is you've already created some good habits. You're drawing trend lines in advance. Okay, so you're good there. Okay, so not only that, we're going to need a close above the trend line, all right, for this to qualify. You have the separation, okay? You'll need a close above the trend line before you can take action, okay? When this turns a different color. So two things go off. Number one, it's a different color, signaling waters down probability. Be cautious. Number two, a trend line needs to be drawn. And number three, we're going to have to close above it for me to even consider the trade, okay? All right, the last piece is the slope of this. If it's turning a different color and it's going to get against you at a 45-degree angle, something that looks like this, all right, no trade. That's a disqualifier, okay? Okay, again, we get the close. If this is turning color on you, you know it's watering down the probability, but if she starts curling over, like she was doing here, okay, no trade. So in the battle, if we were battling real time and I saw this with this, I know it went up. It looks good on paper after the fact, right? But staring at that, no, I would not be long. Okay, that's an opportunity I miss. That's probably a trade Michael takes in the training room, okay? But the things that you have to take away from that is this isn't an easy and obvious trade because that cycle has turned color on you. Okay, now you've added some additional risk to that one. Are you going to take it or not? That's your call. Okay, so I wanted to point that out. So there's two reasons why we draw trend lines. Number one, we don't know if it'll get to the green line, but also if the cycle turns color on it, the trend line is required. So that's the other reason why we do it. Okay, and if she is, you know, a flare goes off, it says, hey, it's watering the probability down, be careful. And number two, if it starts curling over against us, okay, that means you're swimming against the tide now, all right, then you're watering down the probabilities, all right. And if it's curling and you're swimming against the tide, that means no trade, don't take it. All that said, we're making higher highs, okay. If we start gravitating toward the BBC, okay, we'll look to get long the ES, all right, even though it's making new highs on the day, okay. So we're going to look for that. So I'll come back to that. All right, let's go fishing. Let's go to the crude. Crude's stuck in the bubble. Okay, so nothing there. Let's look at the gold. Has the gold breaking out of that sideways action? No, it hasn't. Yes, we have the bearish cross. We are not going to take action until we break out of this range. Okay, let's look at natural gas. Okay, interesting. We're making some higher highs. This one's an easy and obvious one, right? Making higher highs. Okay, let's cut this one up. It's our trend line. Okay, notice how I took it off the two wicks. It takes two dots, two candles to draw a trend line. If there's wicks, draw it on top of the wicks. If it's a body, here's an example. Wick to the corner of the body, that's how you would draw it. Okay, two different kind of trend lines. Okay, wick to wick, that's an easy one. Wick the body, that's how you would draw that one. Okay, this is the up close after the attempt, right? What has happened down here? It's turned color on us. Trend lines required, so we're going to have to close above here before we could even take action, right? And this is watering down the probabilities. It's starting to curl over a little bit too. It's not quite a 45-degree angle, okay? But it's got a little bit of curling action, like what happened over here, so I'd be a little cautious. So right now, it has it had some valuable stuff to talk about, but right now, it's not qualifying. If at some point you start drawing a ton of trend lines, I'm on a single thread. That means my quotes are linked, my charts are linked to the quotes, okay? If I start drawing trend lines and I go to a different chart, those trend lines are going to be transferred over to the new chart and you're going to be staring at this, okay? How do you fix it? See this here? Select all button, left click, the X darkens up a little bit, left click. It'll delete all those trend lines, okay? All right, so here we go. Come back to DES. Might get that pullback here we're looking for, so we'll look over there. Let's go to the currencies. The euro, zoom out, zoom out. We're sideways here, so nothing there. British pound, okay. Normal thing for the market to do is pull back to the BBC, okay. I'm zooming out here. Notice, okay, that looks like we're trending. Zoom out, zoom out. Are we trending? All we're doing is we're stretching out the range, okay? So be careful. No, the British pound, in my opinion, is not trending. And not only that, what's the problem down here? It's red and curling over. So I'm not too excited about staring at the British pound right now. Swiss franc, some sideways action. Australian dollar, okay. Notice we have a little bit of support here from back here. So I would expect some kind of rally here. So no, nothing to be done there. The Canadian, not much happening there. Mexican peso. We made some lower lows here. You know what? We have some divergence. All right, so let's cut this one up here. What am I doing here? Activate the trend line. Okay, there's our trend line. That was the touch and the down close. Is the trend line required? Nope. We have a red cycle and we have some separation. All right. All right. So let's put our stop loss, factor in ticks. All right, let's get short the Mexican peso for the heck of it, okay? It has a lot of good things going for it, so that's why I'm pushing the button. So what I did, okay, to slow things down, is I left-clicked in the red. I did that, okay, to get short the Mexican peso, okay? Here's our stop loss. It's above us, and it's 8 ticks away. You don't trust me? Here it is in the working orders tab. Okay. Remember, if you have this open or minimize, you can always go to this and say, hey, do I have anything working? Okay. This will save your butt a few times. Okay. In fact, I've had to remind Dwayne over the years sometimes, hey, you got some orders working. And, you know, it's just me looking at the box. So I would have this in the background. Anyways, so I left clicked in the red to get short. How do I know I'm short? says it up here. My P&L will start moving. It's highlighted here, and you have this big fat red line in the middle of the chart here. Okay, plenty of places to say, hey, you're short. Okay, the question that we ask ourselves, are we trending? Are we making lower lows? I did one of these, and I like the fact that we had some green support dots here, and they were side by side, but then we broke them. So what that was telling me is, we were sideways here, but maybe now we're breaking down to the downside. All right. We have a bearish cross here. Okay, we drew a trend line. Okay, the normal thing for the market to do is to pull back to the BBC, and we were looking for the down close. So there's step 2. The cycle's red, and we have some separation. So it's got everything there. Okay, so that's why we got short. Okay, now this market hasn't been moving at all today. Okay. Oh, here's my phone. 1 second. All right, now I'm going to hit the mute button. I forget how I do that. All right, 1 second, guys. Almost done. 1 second. Okay, so I'm back. Um, Unfortunately, I have a few phones buzzing. Okay, so, and it's almost 2 o'clock, and to start the Mexican peso, which is barely moving, um, it would be like watching paint dry. Um, so I'll just leave it at that. Okay, I think we covered a lot of good things today. Every Thursday, we're going to do the same thing over and over and over again. We're out of the holiday rut. Markets are moving. So I think we'll be able to do this on a regular basis again this year, starting today, and so we'll keep doing that every Thursday for an hour. Okay. These are recorded. I threw them out on YouTube. If you search CFRN Thursday, they're all there. Okay. And like I said, for the guys that are new, this is a great syllabus for you to lean on. Okay. And if you are returning CFRN members, this is another approach, another way of maybe getting some questions answered, and observing from a different point of view. All right. So again, we'll do this every Thursday, and come with your questions, and I'll see you guys. I'll see you guys in the training room tomorrow. Okay. Thanks.